we've got the FOMC statement. Everybody is expecting without a doubt that they're going to raise rates. Yeah, what's doing?
It's okay.
It's okay now? It's fixed? All right, let me relog into it. My computer is acting so weird. My laptop, darn it. Bear with me 1 second. Let me see if I can get that stream going. All right, let me put up the DMM for a second while I'm trying to get this to work. Take a peek at the DMM, everyone. And let me see if our stream is working. It should be. Okay, looks good. All right, so let's see what happened on 6/14. So a couple of things to remember today. Margins are increased. Margins are increased. By the brokers for this event. Now, the funny thing about it is that even though they raise the margins, we've been able to pretty much trade the way we want, even though theoretically we haven't had enough money in our account to trade according to how much margin you have to have. And the proof is in the previous video. We traded multiple NQs, and if we look at the margin sheet, you need, I think it's like more than $15,000 per contract to have enough margin. So I'll show you the margin sheet, but let me just see what happened last month. I don't remember the trade at all last month, not a bit. Says we were stopped. Oh, we didn't get stopped. No, we did not get stopped. It was a late fill. I remember? It was a late fill, and it was a partial profit. It was a partial profit. That's what happened. It was a late fill with a partial profit. So it was one of the weirdest events that I can recall. It didn't fill. I left the orders on the chart. I didn't end the trade. I didn't do anything. And then it filled late. So it was very unusual. That does not normally happen. But this is an event that, I mean, look, the brokers have raised margins. There's no question that this is a high-risk event. So please understand that if you do decide to trade this, there's a lot of risk, and margins have nothing to do with the VIX. Nothing. It's strictly what the brokers decide to do. Trader day. That's not a margin issue. Margin is the amount of money that the broker requires you to have in your account to take a trade. Anyway, so I think what we'll do, what I'm going to do is trade one contract like I said, it can be unexpected things can happen. I want to get filled. Um, Let me just show you what I mean about the margins and what they mean. So in theory, if you're going to trade the ES, you need $12,320 per contract, full size ES. Full size NQ, 18,480, 18,000 per contract. When you put on a bracket trade with any software, it double the margin. Okay, it's 2 orders. So if you're trading 2 contracts, it's 4 times the margin. That would mean $60,000 in the account, more than that, to trade a 2 contract trade on the NQ. 18,480 per contract. So the micros are 10%, 1,848. The popular instruments that people trade on this report might be the ES. So the micro ES is 1,232 per contract. Keep in mind, you got to leave a little bit of extra money in there in case a trade should go negative. In theory, if they had robots monitoring the amount of money in an account and then close out a trade when an account reaches below margin, you could get taken out of a trade before the trade's even resolved. So it could wind up, you might have started off a little bit negative, it could close you out, the trade could go positive, and you wouldn't be in it to take advantage of it. So the problem, the honest problem, is the brokers have been inconsistent in whether or not they are adhering to the margin. So gold needs $9,100 per contract, so that's it's really $20,000 for 1 contract trade, because the broker is counting it double for a breakout, 1 above the price and 1 below. Bonds, which is certainly a possible trade on this event, is ZN is 2,300 per contract, ZF 1,540 per contract. Okay, so you do have to think, and the interesting thing, that's Ninja Trader margins. AMP is 25% of the margins. AMP isn't doing 18,000, they're doing 25% of it. So they have significantly lower margins. Usually it's the other way around with AMP. Anyway, it's just something to consider and to be aware of. They could not allow you to trade. If I put on a 2 contract trade on the NQ, they could very possibly just not allow the trade. It would just get an error and say you're not allowed to trade because of margin. It's possible. It hasn't happened on this event because we've traded more than 1 plenty of times when the margin was up. So, and that's been a mystery. And I've called the trade desk to verify. I didn't call today, but in the past, I have called the trade desk, you know, just to find out what their policy was on a specific trade, for instance. So I would recommend that you go by what they're saying, because that gives them the right to do what they're saying. Anyway, NQ, we have an 80 bracket. We've got an activation at 1359.59. And what I'm going to do is go for trade 1 contract. The stop is 40. The bracket's 80. And I would go for a target of 120 ticks. And if the market should move 70 ticks Let me just think for a second. Let's say the market moves 60 ticks, move my stop to break even plus 30. All right, so this way, if there's a burst, a fillable burst, a tradable burst, and the market goes 75 ticks and it changes direction, depending on the speed of all the movement, that would potentially move the stop to break even plus 30 so that you could catch some of the profit. So activate 1359.59, one position. I'm wondering if I'm being greedy. So I'm not sure I'm being greedy. And I think I misspoke before. Last month is shown properly on the DMM. I don't think I'm being greedy because look how huge the spikes can be. 200 ticks, 294, 600 ticks in December. That's hard to believe. 285 ticks in November, 294 in March. I don't think 120 is being greedy. You know, nobody knows how the market will react to what the Fed does. That's the one thing you know. There's no way to know how the market will react. Just not possible. I'm just looking to see. I mean, it certainly is expected that they're going to do 25 basis points and no more than that. That's what's expected. This is a report that certainly you could trade moves after the report. For me, this is a report that's so volatile. I'm not sure that I'm that interested in taking a trade after, but it is one of the reports that you could set up. You could certainly set up a reversal like we've been doing with oil and we'll do with gas and some other trades. There also is an ES alternative with a pretty big bracket, 18 bracket. I think the stop is probably a little small. I might make the stop 15. And the targets could be small too. But it's not greedy. It's 100 ticks on the second target. So we've got a breakout trade triggering at 1359.59. One position, 80 bracket, profit 120 ticks, and the stop is 40. If the market should move 60 ticks, I'm going to move my stop to break even plus 30. Okay? That's how I'm going to trade it. Just one contract, because if they are paying attention to the margin, in theory, they would not allow me to trade even one contract if they're paying attention to the margin, because it would require 36,000 at least. Should probably have 40, and we don't. We have 26 and change. So in theory, you know, they've never shut down any of these trades for us. So I'm going to trade it normally, but I'm going to trade it. I would trade it conservatively anyway, because it is a trade that, again, when the brokers raise, I mean, I know there's been a few trades where I've said I don't think they should raise the margins. This is one where I understand why they're doing it. I don't know that it's necessarily quote unquote fair that they raise the margins, but they have the right, obviously, to do whatever they want to do. They're the broker. They make the rules. we have a million templates, so I'm not going to save another one. I think what I'll do is just save an old one, get rid of an old one. I'll rename my February template to July. I don't want to add new templates. We have too many to begin with. 7/26 is July, and then I'll save it. And just let's double check everything. Account warnings off. Label the trade. NQ FOMC. And then I'll save that template one more time. And we will check our brackets as we always do, setting the time to 0. So AJ, in theory, the margin is $18,300 per contract. In theory. I say in theory because they've allowed us to trade. But I think if you try to probably put too many contracts on, I'm guessing that they won't. The micros are 1,800 on the NASDAQ. So testing the bracket in Sim. And going back and putting everything back to normal. It's a 1,400 hours event, so 1359.59, bracket of 80, target of 120, one position. Stop is 40. Putting my charts on live. Make sure the time is back. Time is back. Let's check our sync. Make sure our time sync is good. I'm not trailing Sanders. On a report that's so incredibly fast, that has the potential to be so incredibly fast, I like to do as little automation as I can because it can be so fast. It's hard to keep up when the market, when this particular trade can be really fast. So remember, you can hit the break even button if you have to. I'm using that one feature. If the market moves X ticks, move the stop. So it's sort of like a target one stop move, but it's for when you only trade one contract. And let's check our time sync by going to the website time.is. Let's look at 2 months ago, we were stopped on this. Let's see what happened. It was also high margin. And you could see what happened. It just barely filled. It just barely filled. And you know, an 80 tick bracket, I think that's a pretty reasonably sized bracket. So it just didn't pan out. Now what's interesting is It went right to the PP, right, on the NQ on that one. So what the other thing you could do is I was saying you could set up that reversal trade on micro gold. You could set it up on the NQ if you want. Reversal. This is a trade. Just remember, it's so volatile that you don't want to do anything you'll be sorry for later. Just keep that in mind. It could really, really move. So I'm going to make it a 60 tick target and a 50 tick stop. Micro gold, or you could do micro NQ. You could do full size. You can reverse any instrument you want to reverse. I think that you'll find all instruments will move on this event. AJ, who's your broker? Who's your broker? So where are you getting that info from? You tried an order of 10 contracts. So it's very, it's very confusing in dealing with them when they raise the margins. So that makes me think that what they've done is doubled the margin from what you're saying. But the real issue is you want to be careful on the trade because it is a potential fast mover. So that's really the question. That's really the issue. So we've got a micro gold possible reversal, just a simple reversal setup. Like I said, I'm not prone to jumping into a second trade on this event. You have to really think about it. You have to really try not to chase. We've got levels. We've got the high of the day, $6 away, and we have the low of the day, $7 away. The low of the day with the PP is pretty interesting for a change in direction down there. So, but that's a secondary thought after the main event. That's so funny, AJ, that you tried 10 contracts. Why did you choose 10? Just out of curiosity, just because it's easy to calculate? So I want to thank everybody on YouTube. If some of you would hit the like button, we'd really appreciate that. That would be really nice. Hit the like button. This is our YouTube stream of the week. So it would shock the market if they raised half a point. That would definitely shock the market. So I wouldn't expect that they would do that, but they certainly could. A lot of people think that the Fed doesn't know what they're doing, and a lot of people think that the Fed should have stopped a while ago. And I think nobody really knows what the Fed is going to continue to do. So we'll see. Steve, right. That's funny. There's quite a few people watching on YouTube. Thanks, everybody, for watching on YouTube. We need more likes than that. Everybody should hit the like button. What the heck? All right, so we got about 3.5 minutes to go. It could also be a quiet event. In other words, if they do exactly what everybody's expecting, it might not be all that exciting an event. We see that happen on occasion also with this event, where it's just not that impactful. So we never know, obviously, what's going to happen. So we've just got 3 minutes to go. We have big brackets, watching micro gold. The markets are somewhat down today. So this is probably the most closely watched news event of any month when it takes place. These events are 8 times a year. And everybody just loves trying to guess what's the Fed going to do? What are they going to do next time? Are they hawkish? Are they bearish? You know, what is that apostrophe? Is that apostrophe in the right place? If the apostrophe is in the wrong place, it's going to cause the market to drop 500 ticks. If that question mark, it wasn't there last time, does that mean they're going to raise the rates in 2025? I don't know. David, I don't know. They wield a lot of power. So, I mean, what they do has a dramatic effect on the economy and everybody's lives. So, you can't ignore the Fed. It's probably a pretty good job. I bet they get driven around in limousines all the time, like the Supreme Court, quote unquote, people. All right, 1 minute. Marianne pretty much trading the report. Pretty much trading the report. 80 bracket, 40 stop. Big target though, 120 target. All right, we got about 15 seconds. An 80 tick bracket is big. What's interesting, it didn't seem all that big 2 months ago. And it doesn't always move immediately. So it didn't work. I mean, it just didn't follow through. It didn't follow through. And it's really choppy, really choppy. I'm turning off my breakout, turning off the breakout. It does look like it wants to go up, but it's a chase here. It's almost impossible to know what it's going to do here. It's almost impossible to know. They did exactly what the market said. The market raised 50 points, 25 basis points, and we just didn't get any follow through on the move, none whatsoever. And look, it was pretty fast, pretty fast. Now it's a question of what are they saying, right? What are they saying? And how is what they are saying going to affect the market? That's really the big issue. So if you look at, so gold is almost where it was at the moment of the event, the ES. Looks like it burst down, created a new low, and now it's back up. What's interesting is the euro. I've been thinking a lot about the euro on this report, just wondering what the ultimate instrument for the absolute best safety on this report. The euro looks very interesting, very interesting. And then also back, just curious about the ES, always curious about the ES on this report. So the ES, like I said, it made a new low and it pulled off that low. And then the NQ, let's look at the video. So I don't really have a second trade here. I said I probably wouldn't, that I probably wouldn't. So it's always disappointing when the trade doesn't work. It's always, it's always frustrating. Let's take a look at how the move was, what the move did. Let me render the video. All right, let's take a look. One second. Let's see, I want to make sure I have the video. All right, so let's see what happened. It didn't look like it was going to be a difficult trade, but then it just didn't follow through. Let's see what happened. So we got to 2 o'clock. Brackets are on. And really, it almost was the same thing as 2 months ago. It just tagged that bracket. I'm just wondering if, I can't imagine going to a 100 bracket, but it's certainly a thought. It's certainly a thought. The moves are certainly supportive of a bracket that big. So the price at the moment, the orders, the moment, at just about the moment of the news, the price was 56.50. I can't do it on there. So 56.50. And it filled, it filled at the bottom of the move. It filled at the bottom of the move. All right, folks, sometimes it doesn't work. Sometimes it doesn't work. I want to thank everybody for watching us on YouTube. Next week, we'll have another free stream of the week. So make sure you check your email and come on in. I want to thank everybody. So thanks for watching on YouTube. And our next event, folks, we've got to make it back on Facebook, Meta.